This has certainly gotten some momentum after the tax reform package was passed this week. What do you read into this closer step we have to averting this government shutdown?
Well, thanks for having me, and obviously welcome news by the markets, probably by members of Congress who just want to go home.
Yeah.
We have sort of believed for weeks now that sort of desire to be done for the year would drive them to actually come to agreement on this government funding package that previously seemed like it could be a tenuous fight.
It did. Are you surprised we were seem to be able to get both of these done?
I was actually, the big surprise for me is that they were able to sneak into that government funding bill today this waiver of the budget rules that lets President Trump sign the tax bill tomorrow. I wasn't sure they could do that, and there was no real reason for the tax bill that needed to be passed, whether it's tomorrow versus January 3rd. The implications of the bill would be exactly the same, so I didn't really see Republicans wanting to try to jam that through, but they did it. They got Democrats apparently on board, and we're going to be able to see a tax signing ceremony tomorrow.
Right. Okay. So, I think just everyone wants to get home, right? They're done, and they just want to go home.
Exactly.
So when everyone goes back to work in January, what are we set up for? Are we set up for more fighting, or perhaps this might be the momentum we need to see more bipartisan agreement?
Well, a lot of these moves recently have given Democrats a lot of leverage, and they have a lot that they want to ask for, although apparently not enough to stay here in town today. In January, that means children's health care, which was only temporarily funded, immigration reform, which is a huge priority, even some individual health care marketplace changes that even Democrats who passed the Affordable Care Act in the first place have for years wanted to make some of these changes, and kind of ironically, the inclusion of the individual mandate repeal and tax reform has opened up a pathway to bipartisanship on that.
Stefanie, no doubt President Trump and his supporters are seeing this getting tax done before Christmas as a massive victory. It's his first legislative victory and something that's badly needed to close out what's been a really turbulent year, Brian. But at what cost does this come? Because, you look at the poll numbers, what, about a quarter of Americans or less support this bill? And does it mean that, going into next year, going into the midterms, this is really kind of going to come at the cost of popularity at that point?
Yeah, it's a great question. And at the end of the day, I think Republicans had a bad tax bill or a not great tax bill to pass or no tax bill to pass, and they chose the not great tax bill. But it does have a number of benefits. And one big one is that a number of American consumers are going to have more money in their pockets and American voters will have more money in their pockets over the next few months. So that could be a nice bit of momentum leading into the midterms. The unintended negative consequences, whether for individuals such as in New York, New Jersey, California, the state and local tax deduction going away, unintended consequences on the corporate side for international companies and even some domestic companies whose tax liabilities may go up. If those start creeping in close to the election, it becomes a dicier scenario. I don't think anyone who says they know today how this is going to unfold exactly over the next few months is telling you the truth. And so, of course, it's sort of a toss ball at this moment. But the momentum is certainly helpful for Republicans leading into the new year.
Is it going to look like a markedly different tax package, say, by this time next year or thereafter, given that we're expecting that, as you say, some of these unintended consequences will result in tweaks and changes done next year?
Yeah, they sort of set themselves up for potentially a tweaks and changes bill. They, on the same day yesterday that they passed, both chambers passed the bill into law, they also quietly introduced a tax extenders package for other expiring tax measures that are sort of unrelated. So some of us are wondering, is that supposed to be a vehicle in the next few months to start making changes? We're watching that. But I think the real question on the individual side, individuals don't see these benefits till the 2018 tax year, which the 18 calendar year starts in a couple weeks, but you don't file those taxes until February, March, April of 2019. So that's after the election. It's going to be interesting to see what Republicans can do to try to help consumers and voters realize those benefits sooner.
Stefanie, earlier this morning, we saw some economic data, some GDP numbers, personal consumption numbers that were a little bit slower than what economists estimated. One of the big critiques of this tax package is it's coming at a time when the economy is actually doing quite well.
Yes.
Could this premise actually be a little bit incorrect? Perhaps we're not seeing the numbers as we go forward, that this tax bill might actually be necessary here to give the economy a little bit more of a boost.
Well, that would be a wonderful coincidence if both the economic and political cycles aligned in a way that when the economy actually needed it, we got a tax cut.
Yeah.
That would be very lucky for Republicans. Yeah, absolutely not planned. But I do think, we speak to investors every day, and the sort of momentum that this legislation created, so feeling confident in government, that's sort of gone up. But also just feeling like this is truly the pro-business Republican administration and Congress that they had sort of hoped it would be in the early part of 2017 and even the late months of 16 after Trump won, that maybe they were right. Maybe that bet was right. And so I think that the momentum in consumer sentiment and investor sentiment could be pretty powerful.
Stefanie, just going off tax, which we've been talking about at length for quite some time now, but looking into 2018, there were some aspects of, Trump the candidate versus Trump the president that did actually perhaps positively surprise in terms of some of the toning down on the trade rhetoric in particular. But do you think that continues to be a risk and a tension for next year?
I do. I think that is one of the biggest risks to potentially offset any positive impacts of the tax bill would be a very protectionist trade agenda that could surface more freely in the early months of 18. I think, Trump was speculated to be interested in withdrawing from NAFTA back in April of 17, and he did not do that. But I think the NAFTA negotiations will continue, and other protectionist trade policies around steel and aluminum could move forward. And I think now is the time when members of Congress who have been quiet, or the Chamber of Congress that's been quiet on trade relative to championing tax reform, will be more likely to speak up. And so I do think in the end, trade policy is more likely to end up on the side that's less negative to tax reform, but these headlines will certainly not be helpful, and any actual realization in protectionist trade policies would be detrimental to any gains that we could see from tax.